Hello everyone and welcome to another video. In today's video we'll be talking about who exactly runs the Forex markets. Okay, so the thing you gotta understand is that retail is nothing. Okay, retail is literally 0.01% maybe, I don't know. I'm just putting an example here of the whole volume, okay, of the whole market. Or whatever it is. Okay, I don't actually know the percentage, but I can tell you, I can assure you it's nothing. Okay, retail is literally nothing. We don't decide. Okay, we are all retail traders. You really think that that is because of us, of all the people that trade around the world, the retail traders trading 0.01 lots. You think that it's really because of us that like the market, for example, comes here and then shoots back up? You think really this is us with all the million lots that people are trading and the few dollars that everybody is trading with? Really think that this is what drives the price from, I don't know, let's say 149 to 153 and a half or whatever? Okay, it's definitely not us. Okay, we don't do anything for that. Okay, the only people that make a change in these markets, that actually drive price from one place to another, from one price to another, are the banks and are the financial institutions and all those big companies trading billions and trillions of dollars. Okay, it's not us. Okay, we are trading nothing in comparison to what they are trading. Okay, and if you really are dedicated to trade professionally and consistently and do it for a long time and live of trading and be professional at it, then at least you can do is read a little bit about the history, read a little bit about how everything works. Okay, obviously they're not gonna tell here on Wikipedia how to trade. They do have some interesting information. Okay, so as you can see, for example, here showed in trading foreign exchange markets averaged $6.6 trillion per day of daily volume. Okay, this was in 2019. Okay, so you can literally see how they divide uh, all the trillions of dollars that are broken down between spot transactions, RF forwards, foreign exchange swaps, all that stuff. Okay, which is really interesting. You can read a little bit about the history, but the main thing I wanted to talk to you about and show you is this. Okay, is this. You can see that the overall volume in June of 2020, which is about 1 year ago, okay, you can see that the percentage of overall volume of the top 10 biggest currency traders. Okay, you can see that these are all banks and financial institutions. This is a bank, this is a bank. I don't know this one, but Goldman Sachs, Bank of America. Those are all big banks and financial institutions, and you can see those are only the top 10 guys. There are so many other companies outside of the top 10. They're probably responsible for 2% or 1% or 3% of it. Your retail is can't even be in the top 100 list or the top 1,000. Not even probably the top 10 or 100,000. Okay, retail is nothing. Only J.P. Morgan alone, almost 11% the rate of the whole market volume. Okay, which is crazy. Okay, if you know, calculator. Let's just take a calculator. Okay, if we know that they're doing 6.6 trillion and just 10% of that, okay, that would be 600 billion. All right, I don't even need a calculator for that. That'll be $600 billion in daily volume, more or less. Okay, so this is crazy. So if you really think that retail has something to do in the market, no, they don't. Nothing. Seriously, nothing. It's just air. Okay, because on the top 10 alone, they can literally see like this is 10, this is more 10, 20, 30, 40. So almost 60% of the whole volume is just by the top 10 guys. I think there's a huge list after that are just using 2% or 1.5 or 0.5, 3, whatever. Okay, so only the top 10 are already responsible for 55, 60% more or less of the whole market. So they decide where price goes. Okay, it's them buying here, or even on the monthly, it's them selling at this point. Okay, they are selling here. It's not us. They are selling here, selling. They want to drive the price lower and lower and lower. And then at this point, as you can see in 95, they decided to buy and to make price more expensive. And it came right back magically to this point. Okay, this is all again buy and sells, and magically it came back to this point. Okay, and it had again bullish couple of 5-6 months. Okay, but this is another topic. What I just wanted to tell you about is that they decide where price goes. Retail doesn't. Okay, you have to really understand that retail, I'm gonna say not we, I'm gonna say retail doesn't decide where price goes. Okay, the big guys, I'm gonna say banks decide. Okay, they decide where it goes, not us. Okay, and the only thing we can do is to copy what banks do. This is the only thing that we can do. We can only copy what banks do. So if they sold at this point here, if they sold at this price point here, I think it would be pretty smart to look for sells when price comes back. Okay, because they might want to be selling more at this point. Okay, they just might. We don't know, but they might. Okay, it's the only thing we can do. Probably most people will be thinking differently. They will say like, oh no, price is going up, so we have to keep buying. Well, in the case obviously that people are even looking at the monthly chart, which I rarely see people on the monthly chart. I see them mostly on the 1 minute stuff, and I don't know what else they do. But the only thing that we can do is copy what the big guys do. Okay, the only thing we can do. So I hope I made this a little bit clear to you, so you understand a little bit more on like who actually runs this. Okay, and it's definitely not us. And once you understand this, you will see the market actually a little bit differently. So I hope this helps. And if you have any more questions about this topic, just let us know in the comments down below, or send us a message on Instagram, and we'll get back to you and make it maybe a little more clearer to you if you have any doubts about it. So hope you liked it, and we'll see you in the next one.